It just was a bad tech. I mean, I just a bad authentication issue. Yeah, we are live and one of the set you're gonna get. Okay, thank you. Get rid of the OK button. This is Senate Finance. This is April 2nd. And we are going to take a look today at S-132. And that's an S bill. That did not come, I guess that must have just been introduced because it didn't come out of the welfare. Okay. So Jen, walk us through this. And maybe just a little explanation as to what these health sharing groups are for those that haven't been through it before.
It's been a while, and there may be others in the room who are better equipped to talk about that. But Jen Carvey from the Office of Legislative Counsel. So we are looking at S-132. This was just introduced, I believe, last week. And it is an act relating to annual reporting on healthcare sharing plans and arrangements. And I think it's somewhat helpful to look just at the way that it starts. This would add a new section in Title 8 in Chapter 107 on healthcare sharing plans or arrangements, reporting, and certification. It requires a person, our broad definition of person, in Title 1, who is not authorized by the commissioner under several different chapters related to issuance of health insurance, to offer insurance in this state and who offers or intends to offer a plan or arrangement to facilitate payment or reimbursement of healthcare costs or services for residents of this state, regardless of whether the person offering these is domiciled in this state or another state, would have to submit certain information to the commissioner by October 1st of this year and on or after March 1st of each year thereafter. These are generally, I think, when we looked at this concept in the context of an individual mandate for health insurance a number of years ago. We were talking specifically about what were called healthcare sharing ministries under the Federal Affordable Care Act. And these are often organizations that lump people with perhaps similar ideologies together. They purchase some coverage from these healthcare sharing plans or arrangements, but they are not insurance and they are not required to comply with all of our mandates. And they typically have rules on them that do not necessarily match the rest of our insurance coverage around when they have to pay a claim, when they don't have to pay a claim, how much they will pay, whether there are limits and pre-existing condition exclusions. So they are not, they're not licensed under Title 8, not licensed by DFR. And this is looking at gathering more information about who is out there offering these plans. And I think you'll hear from some other witnesses kind of how this shows up. I think for some consumers, there can be a lack of predictability about whether healthcare costs they have incurred will be paid, and they may run afoul of some of the restrictions on their behavior that may affect whether the plan pays for their healthcare services or not. So here's the information that would have to be reported. The total number of individuals and households that participated in the plan or arrangement in this state in the immediately preceding calendar year. The total number of employer groups, so A is individuals and households, B is employer groups that participated in the plan or arrangement in the immediately preceding calendar year in the state, specifying the total number of participating individuals in each participating employer group. If the person offers a plan or arrangement in other states, the total number of participants in the plan or arrangement nationally. So unlike our typical health insurance plans, these may be a single nationwide plan. Any contracts the person has entered into with providers in this state to provide healthcare services to plan or arrangement participants. The total amount of fees, dues, or other payments collected by the person in the immediately preceding calendar year from individuals, employer groups, or others who participated in the plan or arrangement, specifying the percentage of the fees, dues, or other payments that were retained by the person offering the plan for administrative expenses. The total number of requests for reimbursement of healthcare costs or services that were submitted in the state in the immediately preceding calendar year by plan or arrangement participants or providers who provided services to the participants. The total number of requests, so there's total dollar amount, this is a total dollar amount of requests for reimbursement that were submitted in the state and were determined to qualify for reimbursement under the plan or arrangement in the immediately preceding calendar year. The total dollar amount of payments made to providers in the state in the immediately preceding calendar year for healthcare services that were provided to or received by plan or arrangement participants. The total dollar amount of reimbursements made to plan or arrangement participants in a state in the immediately preceding calendar year for healthcare services provided to or received by the participant. The total number of requests for reimbursement of healthcare costs or services submitted in the state in the immediately preceding calendar year that were denied, expressed as a percentage of total reimbursement requests submitted in that calendar year, and the total number of reimbursement request denials that were appealed. The total dollar amount of healthcare expenses submitted in the state by plan or arrangement participants or providers in the immediately preceding calendar year that qualify for reimbursement pursuant to the plan or arrangement criteria, but that, as of the end of that calendar year, have not been reimbursed, excluding any amounts that the plan or arrangement participants incurring the costs must pay before receiving reimbursement. So it's sort of a deductible. The estimated number of plan or arrangement participants the person anticipates in the state in the next calendar year, specifying the numbers of individuals, households, employer groups, and employees. A list of other states in which the person offers a plan or arrangement. A list of any third parties other than a licensed insurance producer that are associated with or assist the person in offering or enrolling participants in the state in the plan or arrangement, copies of any training materials provided to that third party, and a detailed accounting of any commissions or other, you should say fees or remuneration paid to a third party in the immediately preceding calendar year for marketing, promoting, or enrolling participants in the plan or arrangement, or operating, managing, or administering the plan offered by the person in the state. We're getting close to the end of our list here. The total number of licensed insurance producers that are associated with or assist the person in offering or enrolling participants in the state in the plan or arrangement. Total number of participants enrolled through a license in the state through a licensed insurance producer. Copies of any training materials provided to a producer, and a detailed accounting of any commissions or other fees or remuneration paid to a producer in that year for marketing, promoting, or enrolling participants in the state. Copies of any consumer-facing and marketing materials used in the state promoting the person's plan or arrangement, including plan or arrangement descriptions, benefit descriptions, and other materials that explain the plan or arrangement. The name, mailing address, email address, and telephone number of someone serving as a contact.
Well, it'd be easier just to say what they don't have.
A list of any parent companies, subsidiaries, and other names the person is operated under at any time within the immediately preceding 5 calendar years, and an organizational chart of the person and a list of officers and directors. So that's all the reporting. Then there's a certification of accuracy by the person an officer of the person. And then there's if a person subject to the requirements of subsection A fails to submit the information required, the submission is incomplete. The commissioner must make the determination of completeness not later than 45 days after a submission is received. And if the commissioner has not informed the person of any deficiencies in the submission within 45 days, it's considered complete. If the commissioner determines someone has failed to comply with those requirements, the commissioner shall notify them that the submission is incomplete and enumerate each deficiency found and allow them 30 days after notice of incompleteness to remedy the deficiency. If you don't remedy the deficiency, the commissioner can impose an administrative penalty not to exceed $5,000 per day. They don't remedy the deficiency within 30 days after the initial administrative penalty is imposed. The commissioner can issue a cease and desist order pursuant to the commissioner's authority. And then, so the information was being provided in October of 25 and then March 1st thereafter. This would say on or before April 1st of 2026 and on or before each October 1st thereafter, the commissioner must prepare a written report summarizing the information submitted by everyone who submitted that information and post the report on DFR's website, along with accurate and evidence-based information about the persons who submitted information, including how consumers may file complaints. It allows the commissioner to run rules and they have to take effect on this.
Okay, deep breath. I think this is what we will have this lead sponsor come in and tell us what led her to sponsor this. And before we start asking questions of Jen, I think it might be helpful if we could have Emily Brown do a kind of a background as to what these are, why we're concerning. Jen, you said no insurance producer. Is the producer, I'm trying to remember my vocabulary, an insurance salesperson, or is it the company?
I will defer to DFR on.
Okay, because I know we forbid people who sell insurance to sell these programs.
They can't get a commission for it.
They can't get a commission
I
for
believe,
it. All right.
don't believe they're prohibited from enrolling people, but they can't get paid for it.
Okay. Okay. So this is a long list of things they have to, but I think it's important to find out what they are and why we're asking this before we start nitpicking the list. If we're gonna do that. Okay, Emily, you wanna talk to us?
Good afternoon.
I'm wondering if they know this is in the works, because in the past, they've been pretty vigilant about anything that impacted them, and I don't know how we notify them, but
They know.
they do know. Okay, found them out. All right.
My name is Emily Brown, Deputy Commissioner of Insurance at DFR. So just to answer, follow up on the question that was posed to Legislative Council about what current producers are allowed to do and not allowed to do with regards to healthcare sharing ministries. So 8 VSA 4796E says a violation for a licensed producer. So that means someone who sells insurance to accept fees for selling, soliciting, negotiating, or otherwise orchestrates sale, enrollment, membership, or connections between Vermont residents and arrangements involving the sharing of health-related expenses that is not insurance. So currently, if you are licensed as a producer in Vermont, you're not allowed to facilitate or accept money for the sale of healthcare sharing plans in Vermont. So historically, and as Jen said, the department does not regulate these entities. They, while I think some of their actions probably could be considered insurance, there's currently no requirement for these entities to file anything with the department, report anything, as insurance companies do, health insurance companies especially. So they're kind of right now operating in black box. We don't know which ones are in our state. We don't know how many there are. We don't know how many people are enrolled. We only hear about this when there's an issue, unfortunately. So if we get a complaint or a consumer calls in, it's usually after they have bought a product like this and are having trouble getting their claim paid after they go to their doctor for review care.
Give us a little, what are the?
Sure. Yep. So historically, what healthcare sharing ministries were, healthcare sharing plans were, is they were usually associated with religious groups. What would happen is that a group of people, maybe they were in the same church, or just part of the same religious group, would get together. And instead of purchasing health insurance, based on maybe it was because they didn't believe in the requirement of the coverage, or for other reasons, they get together and say, okay, we're gonna pool our resources together. And if one of our membership or our participants in our church are sick or need care, we're going to donate money to cover their insurance expenses, their health insurance expenses, or their, I shouldn't say health insurance, I should say healthcare expenses. What they have evolved to today are very sophisticated entities who have advertising, they have websites, they are actively trying to solicit people from the general public to join these plans. And in many instances, they're advertised in ways that claim that they are kind of insurance-like plans. It's only, again, like I said, when someone really needs care or there's a large bill that they then figure out that they are not subject to the insurance requirements of the state. Again, like I said, we don't really have an idea of who's operating. We did take an action, I think it was back in 2019, after the law I discussed in the beginning of my testimony was passed, because we did discover through a consumer complaint that these plans were being offered, and took an action against the producer who was facilitating the sale of these types of plans. So I have a few thoughts on, I think this bill would do an important thing, and by requiring the plans who are out there right now to submit information to the department, we would get a better idea of, how many Vermonters are purchasing these, who's out there. We have no way right now, because they're technically not insurance, of enforcing that, right? Because every state also has a different approach to them. I know states like Colorado have taken a similar approach to this, where they've required the filing of information registration by the healthcare sharing companies. But there would be no way for us to have a baseline of how many companies are out there. So I think it would be a challenge to enforce this requirement on healthcare sharing plans. I also, based on our action too that we took back in, it was in 2022. We don't want to legitimize these types of entities. They claim they're not insurance, but if you actually look at the activities that they are conducting, they are paying people. Go to the doctor, they have a bill. They then submit it to the healthcare sharing plan, and then the healthcare sharing plan gives them money, indemnifies them for a portion or maybe the whole amount, depends on what the contract says, for that claim. So my concern is that we create this reporting requirement, and in a way it legitimizes the plan's existence in our state. While the department has not taken and proactively pursued these entities, I would worry about any law that gave them legitimacy as being able to operate in our state.
So they could say, and they report all their activity, and DFR hasn't stopped them.
Correct.
There's been issues. When these first started, when I first heard about them, maybe 20 years ago, last was at an NCOIL insurance legislative meeting. I sat next to the lunch. They're very anxious not to be excluded, but to be somehow legitimized. And I asked if I could become a member. And I was asked if I were a Christian, and I said, well, yeah, I'm Catholic. Well, no, you're not a Christian. and beef in our since the last time they were here, so it was probably in 2019, they told me that there was a fair number of Quaker Mennonite people moving in, that these kinds of things work very well with their kind of communal beliefs. But there was also a Catholic group in this state. But there have, and I thought, I don't know if you've been able to look it up. I remember reading there was a major bankruptcy, I think in Massachusetts a couple of years ago. People are denied claims because you did something that isn't in our belief system, and so we're not taking care of you anymore. I don't know if you pay in or if you just get a bill when there's bill, but I would think as the cost of health insurance increases, the appeal of these will increase.
Yes. I recognize that point. We're facing, I think I've been in here earlier this session and talked about the challenges we're facing with our health insurance market, with our healthcare market. Those are real. But I think there's a few aspects of these too, which by purchasing these plans, right? So someone decides not to buy a plan on the exchange, it's too expensive for whatever reason, they buy a healthcare sharing plan. These plans have people, when they get a claim, right? You go in and the hospital, a lot of our hospitals in our states are nonprofits. So many of them have some type of scale for people who are uninsured. And technically, if you're buying one of these, you're not insured. So what happens is that these consumers then go in and negotiate off of their hospital bill or receive discounts because they don't technically have insurance. Those costs are then passed on to the broader healthcare system and then are then being covered by our Medicaid plan or our health insurance, our commercial health insurance plans. So while I understand this feels like a very quick fix for people, if you look at it from the broader policy perspective, this is creating more cost pressure in our state by people purchasing these plans on the healthcare system broadly.
And so, if someone had a complaint to file about these plans, do they file it with you or do they file it with the AG or both?
So the case I talked about, that was a consumer complaint that we were able to take action on because of the producer involved. And we do see complaints, but in many ways we have to say we don't license them, we don't regulate them. The department to this, like I said, we haven't taken an action to actually say you're practicing unlicensed insurance business in the state. So I think they can come to us, but they can also go to the AG. For instance, if their consumer services division, if they feel like they've been defrauded.
Would that be considered consumer protection if it's not an insurance plan, if it's a sort of collective thing?
I think it would probably depend on what they bought, what the contract says. But if they're paying in money because they've been advertised to saying that you're buying an insurance like product, we're going to cover your claims, and then you don't get that coverage, I would say that feels to me deceptive. If an insurance company did that, we would be taking an action. And I think I'm glad you asked that, because I think it also creates an unlevel playing field. We have our insurance companies who are subject to solvency regulations, subject to review of all their premiums, their forms, right? Which all costs money and is a lot of work. And then if we have these other entities over here who aren't having to comply with the same rules, it's inherently unfair. Not only to, the companies, but then to consumers who are purchasing these.
Okay, I had to go and then you.
Okay, you. So I want to make sure I understand what you're saying, yeah, that you agree with the bill and yet you have misgivings because we're legitimizing the organization.
I just-
passing the bill. Yeah, I know that sounds confusing, but the bill at the beginning, right, talks about, entities that are not licensed by the department, but are essentially, and I'll pull up the language.
And I'm
I
also
don't-
wondering if you have suggestions.
Yeah, well, I'd actually just like to ban them. If we could, I don't know if we can do that.
They're religiously based. so
Well,
that
some of them
probably
are.
would end us the right.
Yeah.
sport.
Um,
Many of them, they started out as religiously based. This is
So-
an S bill,
Yeah,
so.
Yep. Yeah, so if you look at, it says a healthcare sharing plan or arrangement to facilitate payment or reimbursement of healthcare costs or services for Vermont residents. So if you look at our definition of insurance,
That's it.
it is an agreement to indemnify someone for a specific event. So
We define them in this bill as essentially an insurance company.
we're saying they don't have to be, they're not licensed with us, they're not authorized under chapters, and then there's a list in section A, subsection A. But then again, I feel like facilitation payment or reimbursement for healthcare costs is exactly what insurance companies do. So that's where I'm having a hard time.
Yeah.
And again, I want to know who's operating in our state. I want to know what these entities are doing and how we can better protect people, whether that's through information, doing more, proactive consumer reach out. But I don't want to create an out that unintentionally says, and you're not insurance, so you're not breaking our laws. And I don't know if that's what this bill does. I think, I think there could be an argument either way.
This
What
sounds, yeah, like we need to have the lawyers sit down and think this, because I can see these are people, many if not most of them are probably younger, healthier, so they're not going in to our regular healthcare pool, which drives up the cost for everyone else. If they are in fact getting below cost care at the hospitals, that again is being transferred on to us. If there's 100 people in the plan like this, that might not make a difference. If there's a couple thousand people in the plan like this, that can make a big difference. And if they go belly up, there's what happens. I mean, these people have paid in, there's no guarantees, there's no universal indemnity fund, there's nothing. And they may have been paying it for years and never gotten anything out, so there are issues, and they have traditionally been a faith-based organization, which instills trust in many people. And also gives them some kind of remove state regulation, or at least it gets a little risky there. So I guess the question is, what do we do? This would require a report, but the very fact, since you can't review their advertising, the fact that you are reporting to and under the supervision, I mean, who knows what's being said? We report all our facts to DFR and, they're fine with it.
Right.
Yeah. That's kind of hard. So
I'm just curious, you mentioned about hearing complaints. Like over the past few years, how many complaints I hear about these on like a radio? app,
Yes,
something like
right,
that.
yeah.
I'm just curious what the volume of complaints? And then I got
Yeah.
a second part to that.
Yeah, I don't have the numbers.
Oh.
But again, the action we took was based on a consumer
Yeah.
complaint, so I'd have to go back
Oh.
and, but I can get that information for the committee.
And then I'm curious, if I wanted to start one,
Yeah,
you know, could I go out, find 1,000 people,
Yeah.
do an actuarial analysis, figure out what I want to make the premium?
you
that
wouldn't
way?
even have to do an actuarial analysis. You just set your
Sign
rate. and-
sign me up.
Well, I want to make sure it doesn't fail, so I want to set the
But
rate.
That's the problem, is that there is, you know, and back when we were, dealing with this one company in 2022.
Hmm.
We had those conversations. How are you determining, you know, what your share is,
Yeah.
right? And there is no, there's no analysis. There's not like, oh, we are required to pay out X claims. It's, if there's no money, they're not gonna pay out claims.
Yeah.
And there's no accountability for how much are you paying your executives? How much are your admin costs? So you could go out and do that right now and put up a website and say, come join my healthcare sharing plan, and there would be nothing preventing you from doing that.
When they first started, the gentleman at lunch with me was saying, well, you know, we got together, we're all in this faith-based group. And my kid fell off the swing and broke his arm, and, you know, we took him to the hospital and everybody chipped in and paid his share. It didn't even sound like there was any monthly fee. It's just like, well, one of our members has a bill. And so we're all committed, we've all signed saying, well, I'll chip in and pay the hospital bill. Which might work if it's a broken arm. If the child has a brain tumor, it will be a little more expensive. I don't know what happens when there's no money and no insurance and or not enough money,
Well, it's not insurance.
Right. No coverage.
no cover.
Yeah,
And that's when there's been complaints, at least I've read them in the paper,
right.
about people being saying, well, something you did doesn't comply with our faith beliefs, and therefore you're out, we're not covering your bills, and they don't usually say that until you're in the hospital with a bill. And what happens, yeah, if there isn't enough money. But literally, you could do that.
Because you said one thing that kind of struck me, that obviously they identify as a private payer.
Mhm.
They don't have insurance, so they're private pay, therefore they're gonna have a lower
Right.
rate.
Right.
So why wouldn't I start a company that does exactly this to lower the healthcare costs for Vermonters? If I can come up with the actuarial analysis that determines how much I need to have for a premium to cover the benefit, not the insurance that I,
But that's what an insurance company does.
Right, and
Right, but-
I would say, sorry.
no, you're fine.
I would say as an insurance
Yeah.
regulator, it's because insurance is a regulated space, and if you want to engage in the practice of insurance, you're supposed to be licensed and overseen by the Department of Financial Regulation in Vermont and all the other states.
I mean, you
It's
could
just
do that.
interesting.
You
It's
pay
interesting,
yourself.
it's very.
I don't know anything about it, so.
Yeah.
I mean, you could be paying yourself $500,000 a year to be the head of this company. And then you
Right.
get two big bills in a row. You're gone.
Right.
Your people that have been paying you have nothing. They have no insurance. They have no, well, now they
They never had.
never had insurance. They got a big bill. They were operating in good faith that literally that their people in this, they're usually faith-based groups. There may be some just businesses now. But the big appeal was the faith-based ones.
Right.
And you've got nothing.
No,
I mean.
I get that, but
I
I'm
mean,
saying if you
it-
did the
it-
actuarial analysis to determine what
But
you
you
have
don't
to.
need, you don't have to do that.
No, I'm saying if you wanted to create one that was gonna continue on, not just past one or two big instances.
So why isn't it an insurance company?
I think if
I
you, if,
I don't know.
yeah,
It's just,
if you take like many, many steps back, right? And you think about why do we regulate insurance, right? Why do we have the structure that we have? It's to protect people from companies, or I shouldn't say companies, should, you know, whoever it may be, from taking your money, promising you something, and then not coming through on that promise, right? And so if you look at even the Affordable Care Act, right, what it did, it said to health insurance companies, hey, if you're gonna collect $100 in premium, you're gonna make sure that you're paying out $85 of that to claims, right? And the point is to protect consumers, protect the health insurance market, and make it a safe place to buy insurance. We're living in a space right now in Vermont where, yes, healthcare is very expensive. Health insurance is therefore very expensive. But does that mean that we should just throw our hands up and, you know, say, well, it should be a free for all, and, you know, that you should just be able to go out and buy a healthcare sharing plan, and if the hospitals lose money, then it's, you know, too bad. Like, I think that there's a lot of value that is in a regulated insurance environment that when you have people out there who are saying, give us your money, but then there's no protection, that damages not only someone financially, but it also damages the integrity of the system. People lose faith in insurance, right?
Read John Grisham.
well, my thought on that is then,
This has a long, I mean, insurance regulation has a long history.
Yeah.
Mostly based on abuses and trying to make sure that it is a safe marketplace, that, you know, as expensive as it is, when you pay that you are going to get back what you're paying for, and not that you're going to submit a claim and the company's just gone. You know, we've had it in health insurance with cigarettes. We've had it in a lot of property casualty. It's just, this has been a long time and evolving, and it's been to protect the average consumer who should not have to do all of this. I think a lot of it is like the UCC has started World War II, post World War II, but definitely trying to protect people. We haven't had a, you know, run on the banks in a while. It's another place we regulate, but because banks did run out of money,
Right.
and have done pretty well in protecting that every once in a while, but there is insurance.
Well, Blue Cross and Blue Shield's in the room, so I really want to hear their thoughts on this.
Well, they haven't, do
I'm
you want
happy
to
to speak.
share? Okay, well, I've got Mike Fisher first.
Go ahead.
Thank you very much.
You.
Good afternoon, Mike Fisher, healthcare advocate. I just start with an appreciation for the conversation that's happening at this table. I think it's really important. And I appreciate the members who introduced this bill. Despite its late timing, it's great to have it at the table. And at the Healthcare Advocate's Office, we do receive complaints. We do receive calls from people who think they bought coverage, who've been marketed something that is designed to look like insurance, that may say things like ACA compliant, because there is a provision in the Affordable Care Act that sort of recognize these entities, that may market it, you know, a plan as a gold level plan or a silver level plan. These things are designed to fool people. and people are fooled. So yeah, and to answer your question, how many? I don't know. I always have to give the caution. I can look at how many cases we've had. I only seen it's a handful over the last couple of years, but I always have to make the point of the universe of Vermonters who have been aggrieved by the healthcare sharing industry. How many of them knew to call my office? No one. My data, the data that comes from my office represents more of a canary in the coal mine. There's a when we see a handful of cases, there's a dynamic. How broad is it? I think we would need a bill like this to have a better understanding of how broad it is. So I agree with the concern, I recognize the concern that DFR just expressed about not wanting to give legitimacy to these things. Recognize they already claim a lot of legitimacy on their own. So, and so I think it'd be worth taking a moment to make sure the bill doesn't do more of that but I think the data is important for us. It would be good for the public, it would be good for us to, in our understand what level of protection we need to do for Vermonters. I too, if we could, would vote to ban these things. I don't think we can. But I also think the conversation that I just want to throw my hat into the conversation we just had about the definition of insurance and sort of that example of someone believing they've paid into a system that is going to cover some amount of cost as a result of needing to go to the doctor. If that passes the definition of what it is to sell insurance in the state, we should require the very same protections we do to Blue Cross to these entities. We should require them to get licensed. We should require them to be reserved. We should require them to do all of the things that we do to protect the public. And so that's a little bit of a radical statement, but I'll back a step up and say I think the first thing we should do is understand the landscape, understand how many Vermonters are paying into them, and all the data that is required.
And maybe to start with, we should just ask who they are, their name, and how many people they cover. Then they can't say, well, we're reporting all our claims and we're reporting all our information. We're reporting everything in insurance company reports, and they haven't filed anything against us. That would be a foot in the door.
I guess I would say any information is better than what we have. But the information that's spelled out in the bill would help us really understand the dynamic of the business here in Vermont. And then let me just say another statement about sort of what is religious exemption from state laws. I'm not an expert in this, but it seems to me like if you're a religious entity that owns a restaurant, you still have to qualify for the Department of Health. If you're selling alcohol, you still have to do it legally here in the state. If you're selling insurance or something that passes the definition of insurance, the fact that you're a religious organization doesn't free you from the laws of the state. So
That's where it gets tricky, because if you don't live by their religious tenets, they can dump you.
yes.
And there's been examples. I've got to go look up the one belly up.
I don't know if this is a question for Mike or maybe back to Emily, but just doing a little Google research as you're talking. I mean, if you Google these, you can find a whole bunch of them with websites that look like insurance company websites. I mean, that are trying to sell you their plans. But one of them, the Massachusetts Division of Insurance has a website that, do you all have a page that basically, consumer information?
So we put out a press release or it was an alert, consumer alert back in 2019 with the Attorney General at the time. So when I was preparing for my testimony, that was the only thing I found on our website that gave consumers information about what these are, what you should be aware of, and the risk of purchasing them. But we don't have a dedicated page to healthcare insurance.
And I just wonder what other states do, if other states collect data or have any kind of regulatory structure.
I think it's just 2 states. I think it's Colorado. And I'm not gonna be able to draw it down, but a Midwestern.
I'm only aware of, there was a Colorado law passed that is very similar to the bill you're looking at today, and they require reporting. I do know, though, that states like New Mexico recently have taken action against healthcare sharing ministries. So there's states that have taken action. Maybe they don't have a proactive regulation, but have taken action against healthcare sharing ministries for the practice of insurance in their state, unlicensed practice.
Thank you.
Okay.
And despite the fact that in that bill, you know,
There are, I do have this little housekeeping.
yeah, that's what I was thinking.
Anything can go on a housekeeping as long as everyone agrees. Okay, Sarah, you wanna talk?
Sorry, it's Washington.
Heather, if you or your clients would like to talk, you know where to find us.
I'm happy to bring it in. Thank you for having me, Sarah Teachat with Blue Cross and Blue Shield of Vermont. And I don't think you'll be surprised that we would advocate at the bare minimum for the information you're asking for here in the report, but also applying insurance statutes to these entities. If you look online, they advertise premiums, they advertise coverage, they look a lot like health insurance. They're not health insurance. And all of the things that you are requiring of health insurance plans here in Vermont, health insurers are not required for these entities. And I'll throw the big ones out there. Coverage of pre-existing conditions, not required. Caps on coverage, you know, back in the day, health insurers capped the amount that they would pay out for you. These may do that, or they may not. Also not covering certain things. I think a number of them don't cover childbirth in the first year that you have the plan, or you have to have purchased the plan for several years before they'll cover childbirth. And many, many other services, some for religious reasons and some for just their expensive services to cover. So this, I think Emily said it very clearly, is taking people away from the, health insurance system. It's probably, and right now, insurance premiums are very, very high. And so this is going to be more attractive for people than buying health insurance if they were truly doing an actuarial analysis and actually covering all the things that health insurance companies are required to cover. Their premiums would be the same. So the reason they're lower is they're not covering.
Not for, it's a lot lower than they are able to get a discount from the provider and sell this. Emily said, if you're getting this, I'll pay discount.
Right. So they're paying cash to the member, and the member often has to front them the money to the health insurer or get on a payment, or the hospital get on a payment plan. So sure. But maybe the prices would be less for all of us.
I don't know. I've only learned in the past 45 minutes looking at websites, and I believe they're called shares from my research.
They're moving away from the ministry term, I think,
Yeah.
because they're looking less like a religious
Religious
group.
my parish got together and we're all gonna, our coffee clutches.
You could have the Vermont State House Health Care Sharing Plan for all the members here who need healthcare.
We're getting health. I know, right?
You're a tight knit group. You all support each other.
I'm done. I just looked up bankruptcy. Ferry Ministries, which was one of the largest organizations.
I'm not
in the
officially
industry.
suggesting that.
Did file for bankruptcy, that's all.
That was
No,
one
no,
of the
no.
testimonies.
No.
Can I ask Sarah?
So do you share Emily's concerns about legitimizing them by asking them for the information.
This is fun. I share her concern, but I think there's probably a way you can draft the bill to
Yeah.
get around that.
Yeah. Okay.
It's like,
I noticed that we haven't said any names, and I'm fine with that, but I'm curious on your understanding of this market. Is it really fragmented or are there like 3 or 4 big players in this space?
you should look at the report from Colorado. I think that there are a few big ones and then a lot of little ones. And I think the most interesting thing about that report is they reported to Colorado which states they're selling their plans in. And they report, many of them report selling into Vermont. So I think that I looked at the report when I first learned about it and it was quite interesting. I think the other thing that Colorado was shocked at was the number of people that had them. And so then they had concerns about their legitimate marketplaces being drained of the pools.
I'm looking at the program, the headline in restricted health nonprofits that is now with that, it's not a family empire, including the pot farm, a bank, and an airline. It's gone. And it's another one that's a major one that's gone. And there's no either bail out the members or to transition them. And if you, in most states, if you're 55 and you're gonna get some very expensive health insurance for 10 years because they don't do community living. So, it's an issue and it hasn't hit us yet, probably because we're a small player. We get a measles epidemic or anything else, we could have a real problem. But we don't know because we don't know how many of those people out there. And do they report themselves? When you do a survey, do they say, yes, I'm insured? But they think they're insured. We don't know. So I think it would be good to know. But I share the concern about giving them another marketing tool to make them look more like insurance. So we'll have to think on that.
Is the Colorado, I'm just Googling that Colorado report. Is there's one from 2023. Is there one?
I think that's the.
Okay, it says it's a first annual, but I can't find the second annual report.
They haven't done it yet. It was an interesting report. Thank you for listening to us.
Thank you. Responsible for this doesn't. Okay, committee.
Okay.
We are 5 minutes early, but several of us need to leave early. I'm gonna keep going. Yeah, so going back, we did a walkthrough of H 398 last week with Cameron. This is the Economic Development Authority. Bill, and Cameron walked us through it. We're going to give Cassie Salinas. Master it too badly. CTO of Vita, and Kathy is on up.
You ready? Okay.
I think we're ready.
All right, and my colleague Jennifer is with me as well.
Just here, okay.
Room there.
You pull on a chair, we'd like to be up there together. And just a little bit, we talked a bit about Vita the other day when we walked through the bill.
Right.
So yesterday we were talking about paper and kinds of cash, just the UCC. And I know you buy a lot of paper.
I buy a lot of paper.
Well, Vita buys a lot of paper.
Oh, commercial paper.
Commercial paper, yes.
Yeah.
So a little bit about what you do, why we formed you, and
Yep. Yep. Let me just get my set up here.
We're
minute
at a
to-
time, so take,
Are we online? Are we live?
we are live,
Oh. Okay,
and we can set you up to share screen.
so for the record, I am Cassie Kalina, CEO of Vermont Economic Development Authority, and with me is.
Hi, Jennifer Evans Butler, General Counsel and Director of Closing at, yeah.
Hope I'm not having a moment where my computer isn't gonna turn on like.
Well, yeah, for sure.
We're having a bad tech week in here.
You know, it didn't start well for me today either. So while we're waiting to boot up, what I have handed you is our most recent annual report. Every year we do an annual report. And on the paper theme, I normally don't do paper, but it was our 50th anniversary. So we went all out and did something that hopefully will be found on tabletops for a few months anyway. And it's a lot of background on VITA. I will spend a little bit of time. Chair Cummings, you and I had talked about, it's been a while since I have done an overview of VITA in this room. And so with your permission, I'll spend a little bit of time doing that, and then we can segue into H398, or we can flip it. What, I'm at your pleasure. It's the order of things.
A little background, then you can talk about.
Okay. All right, and I do have a link, I believe that Charlotte sent me.
Hello, we start with mushrooms in Addison County.
Yeah. Yes, I hope you find at least one borrower name in there that you recognize from somewhere in your neck of the woods. Okay, thank you.
We did send you these slides in advance, but I think it'd be helpful to have them up, so which is real nice.
I'm getting there to open Zoom meeting. All right, looks like I'm almost there. I'll turn off my audio. Except my audio.
Turn your speaker off.
Oh, yeah.
Okay. All right, so thank you for welcoming us here today. Vermont Economic Development Authority is an instrumentality of the state, so similar to VHFA, VSAC, Vermont Municipal Bond Bank. We're all created under state statute. However, we are not state agencies. We're not employees of the state. We're self-funded. Each one of us has a specific financial arena that we operate within. So for VITA, we are the commercial lender provider of capital for the state for economic development. And when I say provider of capital, generally speaking, what we do is make loans to businesses. So eligible businesses run the gamut. I'm already way ahead of my presentation here. So we were formed in 1974, and our mission statement, which is also on our website, is to contribute to Vermont's economic vitality by providing a broad array of financing programs to eligible businesses that create jobs and help advance Vermont's public policy goals. And that last part is key, as well as some of our programs go into things like renewable energy or supporting a certain forestry sector, let's say agriculture. So it's all encompassing as far as the different sectors of the state. We have a 15-member board. Everyone's appointed by the governor. 5 members are ex officio. So we've got the treasurer, secretaries of ACCD in agriculture, the commissioner of public service department, and commissioner of forest parks and recreation. They're all on our board, or their designees are on our board, and then 10 citizens that are appointed. Our main office is over there. Up the hill, we have a beautiful building that was formerly the elementary school in Montpelier.
I went to second grade there.
You did?
It was the last class.
Oh my goodness. That is so cool. We love our building. It's beautiful. We welcome you to come look at it anytime. We've got plenty of space if you need a spare office one day. VHCB is on the first 2 floors. They lease from us, and we occupy the top 2 floors, and we've got nice parking that's free, so we love it. Our loan portfolio, which is basically all our assets except that building, is approximately $280 million. And we have 41 people that work both Montpelier, where I tend to spend most of my time, but we have an office in Burlington and an office in Middlebury. So we're kind of complicated. We have the instrumentality as the overarching entity, VITA. And then within VITA, we have several other entities. You may hear of the Vermont Agricultural Credit Corporation. If you go into any of the
This
agricultural
question
committees.
came up the other day as we walked through it, is what were these created entities?
Yes, yeah, it is complicated. Do not try to understand everything that's in our statute. That's what we're working on, simplifying the statute. So that's next. But VAC, or VITA Agricultural Credit Corporation, was created in 1999 as a nonprofit within VITA, and has a mission of supporting the agricultural sector. Traditionally, we've done a lot of loans to dairy farms. There have been times in the past and present where the economic conditions for dairy farming are very tough. And traditional banks and other traditional sources of capital do not lend readily to agriculture. It's a specialized area of lending where you have livestock, you have crops. Those are things that are non-traditional in the source of collateral. They die or they walk away. They need to be monitored carefully. So it is sort of a specialized area. So VITA, through our entity, Vermont Agricultural Credit Corporation, does lending to the agricultural sector. More and more, that's diversifying into a lot of different things, such as maple, small crops, orchards, value-added agriculture. So the concentration in dairy is decreased. We know about hardships of dairy farms. I'm sure you do in Addison County and Franklin County. the number of farms is decreasing, but the size of the farms is increasing. So you've got to be a certain size. Vermont Small Business Development Corporation is another nonprofit that was formed for the purpose primarily accessing some federal funding that is available through USDA, and it's called the Intermediary Relending Program, or IRP. And we've used this program to do small business loans. Small being a relative term, so generally speaking, it's loans under $500,000. I believe we've increased that to about $1 million now. But for the most part, these are the smaller loans, and that money from USDA is extremely important to us. It's money that we get at 1% interest rate that's repaid over 30 years. You can't get that anywhere else. So we use that to bring down the overall cost of lending to our borrowers. Then the fourth entity there is Vermont 504 Corporation. It is a small business development, SBA, Small Business Association Certified Development Corporation, CDC. Get that right? Okay. The SBA CDC program enables lenders to do a subordinate loan that is sold on the secondary market. We work in partnership with the banks. So the banks do a senior loan, we underwrite a subordinate loan, and that subordinate piece is sold on the secondary market. So it's sort of a pass-through conduit type of vehicle there. So when you hear about perhaps some of these other acronyms or names, it's all within VITA. And from a branding standpoint, we refer to ourselves as VITA, regardless of whether we're doing a small business loan or an ag loan, it's VITA. So where do we get our funding to make the loans? As I said, we are not a state agency. So we borrow from other banks. We borrow from JP Morgan, TD Bank, I said USDA as well. And then we relend that money and we mark it up to cover our overhead. So we need to borrow at as low a cost as possible so we can then provide that low cost funding to our borrowers. The way that we do that is the state provides moral obligation to our lenders. So the state is pledging its guarantee. I say guarantee, it's not the full faith and credit, it's a step down, but it's the moral obligation of the state to make good if VITA defaults on our loans to our lenders. And so that is extremely important for us. The treasurer is on our board. As I said, he's one of the ex officios. And it's been a very successful program. And then we've got these other sources as well. As I said, USDA, we do have, additionally another bank that's in the farm credit system, CoBank, which has been very terrific for us. We've got a great relationship with CoBank. It's kind of like our working capital line of credit. It's more expensive source of money, but when we need it, it's there. If I'm going too fast, please stop me.
This is in the 10% for Vermont. A lot of that came out of discussions, lobbying, pressure to form a state bank.
Yep.
VITA is as close as we get to a state bank. You can't go in and put your savings account in there, but access to capital was the one thing that is smaller or maybe higher risk businesses had issues with.
Right. Yeah. Thank you for noting the LIAC piece.
I'm going to ask a question that I'm probably going to regret, but the difference between VITA and the bond bank, seems like there's some overlap.
There is a little bit of overlap. You're right. And I'll get to what we do, but since you bring that up, our overlap is in certain types of bonds that both entities can do. So VITA provides capital to private.
Right, and bond bank is more to municipalities and school districts and stuff, but is it similar and otherwise, it's kind of the same?
Well, there's this other category that's like higher ed institutions and healthcare, nonprofits, and where we both can.
You're overlapping.
And
there.
it gets
Okay.
allocated. VSAC is in there.
You're talking about the bond cap?
Yeah,
Okay.
well, but there's a certain private entity.
Private activity bond.
Bonds that every year.
Yep.
When we set the revenue expectations, the E-board allocates a certain amount of that to VITA or to I think VHFA, VSAC and VITA.
Correct.
The three.
Yeah.
But, okay, that's interesting. But back to the question I asked a little bit. So you said there's some entities that are overlapping, the healthcare and higher education. So just pick something like Castleton University. You could both give a loan to Castleton.
Yeah.
Could they get a loan from both of you at the same time to do some project there?
Yeah, theoretically, yeah.
Uh-huh.
We could participate in the same project. Generally, the bond bank is doing bonds, larger transactions that then they sell. Whereas we do direct loans that we hold in our portfolio, but we can, for something like that, we're both doing probably a bond.
And what about a private college or?
Yep, like Middlebury College, we can both do that. Yes, so there's a little competition there, friendly competition. We're very good friends. We work together. That's healthy.
No, that's helpful. Thank you.
Okay. So I'm just gonna kind of walk through a series of FAQs, I'll call them. These are questions we get asked quite a bit. We are statewide, and we are the state economic development financing lender. We've lent over 2.8 billion in the 50 years throughout all 14 counties. You've got the annual report there. That's a link in this document. Where does the money go? As it goes to for-profits, nonprofits, partnerships, corporations, sole proprietorships, you name it. Doesn't really matter what the legal entity is, as long as it's legal. Startups, expansions, renovations, new constructions, acquisitions, real estate, machinery, equipment, working capital. You name it, we can find a way to do it for the most part. And then this pie chart shows you the composition of our portfolio. And as you can see, a lot in travel and tourism. And then agriculture. Yes, Senator Bulik.
Thank you, Patsy. First of all, this is fabulous.
Oh,
Thank you very
thank you.
much. Whoever did this should get some kudos.
Yeah, the design.
Yeah. You might be getting to this, but I'm wondering, there's so much talk lately about bad actors coming into our state. Do you have a pretty thorough process to vet folks before you work with them?
Yes, we have a very robust underwriting process. I'll start with it's a small state, so generally we have heard of or know of a business when we apply, but if we haven't, it's startup. We do the check this Secretary of State website, make sure they're formed and paying their whatever annual fee to be a legal entity. If it's an individual, again, we do the background credit checks. So it's pretty robust. We have not had
I know, right?
that experience. Yeah.
Thank you.
Okay. So an easier way actually to answer the question of what we do is to say what we don't do, and that is we don't do housing. We've got a little bit of room in there for some exceptions, which includes mixed use properties with less than 50% housing, as well as long-term care. That was something that was added a couple of years ago to our statute to do direct loans to long-term care facilities. So for instance, we did, Virgin's Village in Virgin's, it's a new
Virgin's Grand.
Virgin's Grant, yes.
That just opened, by the way, everybody.
Yeah, they did, because they kept putting on the,
They just had their first residents move in this
Excellent.
last week. Yeah.
right, and we used LIAC money for that, which was key to making the deal work.
Mhm.
The other exception is investment real estate. So that's developers who want to develop a office building. They're not going to own it. They're going to lease it out. That's really the area for the bankers. That's what they do, and they don't need us to get involved in investment real estate.
Sorry, Cassie, I have another question.
Mhm.
You. And I'm looking at your pie chart and what you are funding. I don't see anything there about healthcare. Do you ever?
We do healthcare. It's
You do.
probably in the other classifications.
Thanks.
Yes, it's just, yeah, you know, I'm trying to think of some of the recent.
Chiropractor.
Yeah,
Okay.
they're small.
Small den.
Right.
Yeah.
Okay. Great, thank you.
Do we compete with banks? And I've got my friend here, who will back me up on this to say, no, Vita does not compete with banks. Vita works with banks. We partner with banks. And part of the, I want to say magic of Vita is that we leverage the public dollars, if you will. So for instance, in our statute, we are limited to a maximum of 40% of the cost of a project if it's a commercial project. Doesn't apply to agriculture. The other 50% has to come from other sources, and generally it's banks, credit unions, other lenders, as well as borrower equity or grants or things of that nature. So over the course of history, when we look back, the Vita dollars have been leveraged 3 to 4 to 5 times over, a time period there. So that's important to know that it's like this money is putting to use other money. And if it's helping, say, a traditional lender get to the finish line on a deal because Vita's coming in with a subordinate loan, that's excellent. That's what we do. Just some statistics here. Things that we track are jobs impacted being jobs created and jobs obtained. I've just got some numbers here as to 5-year averages. Here, number of jobs. Well, the total down at the bottom is close to 18,000 jobs over the past 3 years that have been impacted by Vita projects. And then we also track wages. One of the metrics is that we want to see, and we ask our borrowers, what kind of jobs are you creating? What are you paying? Are these salary jobs or hourly jobs? Are you providing benefits? What kind of benefits are you providing? What we're seeing is a trend more and more of, borrowers are providing benefits. And I view this as really positive because of our concentration in hospitality. And generally those are lower paying jobs, perhaps hourly jobs. And despite that concentration, we are seeing more money going to benefits. Again, it's, this is over the past 5 years, and then if we look at how we compare to the national average, we do pretty well. So I think this is a good story to tell as well. Just real quick rundown of some of the other programs. I've been talking primarily about direct lending, but as was referenced earlier, we are a bond issuer. We're a conduit bond issuer. So we issue tax-exempt private activity bonds for nonprofits and small manufacturers. We have the CDC, and we are a 504, an SBA lender for the 504 program, as well as for something called Community Advantage, which is similar to what the banks do, but it's in a higher risk category and it's smaller loans. And the SBA provides a guarantee to us for that loan. And then we administer several programs on behalf of the state of Vermont. So this is state and or federal money that we will underwrite that loan for and service that loan and close it and fund it, but the money comes from the state. So the Drinking Water Revolving Loan Fund, the Clean Energy Development Fund, State Infrastructure Bank, Brownfield Revitalization Fund, and the Clean Water State Revolving Loan Fund. So just to give you an overall picture of what we do. Then every now and then there's a disaster. Seems to be more the theme, and we'll be talking about that when we get to the changes in H 398. But in the past, what we have done is Tropical Storm Irene, we had an $18 million loan program. We got money from the state. We quickly deployed that out to 350 businesses that were impacted by flooding. We still have some of those loans in our portfolio. You know, the key there was to make it as flexible as possible. So we've had to make those kind of long-term loans, and for the most part, they have paid. We've taken a few losses, as we knew we would, but it was a very successful program. During the pandemic, like the banks, we did full and partial payment deferrals. We deployed $45 million in paycheck protection loans. And then after all of that ended, we had another $18.5 million that came from the state that we put out in forgivable loans. And these went to businesses that still had a gap after PPP, after any grants, after insurance, after everything else, there was still a gap. And these were the hardest ones to get the money to because they fell through the cracks. It might have been they didn't qualify for PPP because they actually incorporated the day after the pandemic was declared, and things like that, that there seemed to be a fair amount of businesses that still needed some help.
Passing to that last part that you're talking about there, of those 201 businesses, was there a theme as far as what industries they were in, or?
A lot were in service businesses.
Okay.
Yeah, what other names?
I was thinking restaurants and hospitality.
Yeah.
Tourism, hospitality
Yeah.
service, okay.
Yeah.
All right. Thank you.
Restaurants.
Okay, shifting gears here a little bit, I wanted to make sure you're aware of the State Small Business Credit Initiative, SSBCI. You may have heard this term. It's a terrific program that VITA was the beneficiary of years ago, back in 2010. The state received about $13 million in money from the US Treasury under this same program, and it was reactivated during the Biden administration as part of ARPA. This time there was a lot more money going around, and the small state minimum is implemented in this program. So Vermont got close to $60 million as a small state. So on a per capita basis, we did very well in the amount of money that we got. And working with the state, it flowed through the state to VITA, which is the implementing entity. Half the money is being used to subsidize interest rates on the VITA direct loan programs, and half the money is going to venture capital. The great thing is this money stays in the state forever, in perpetuity. So as the loans that we've applied this money to get repaid, we just keep putting it out. So that $13 million that we received in 2010, we're still the beneficiary of that. This is gonna keep going for quite a while. So the 29 million that was allocated for VITA to put out in interest rate subsidies, we've used that up. That went out pretty fast, very successful. We've brought down the rates on our loans 1% to 2% below our already low cost there. And just some stats I've got for you. It's supported approximately 160 projects totaling over 147 million, resulting in leverage of about 5 to 1 today and 2,000 FTEs. So very successful there. Now, on the venture capital side, that money's been a little bit slower to go out. We put out 2 rounds of RFPs to solicit interest from venture capital fund managers. To date, we've executed agreements with 3 of those: Fresh Tracks, Quarry, which is Green Mountain Accelerator, and Features Capital, which is a really interesting fund in Norwich that specializes in sort of the biotech area. So you can see that money is going out, but not as quickly, which is to be expected. It takes more time to vet investments there. But we also still have some money left that hasn't been absorbed in the venture capital side. So there's,
Can I ask you?
yes, oh, sorry.
The venture capital funding, so this is basically money that is from a private investor, a venture capitalist that you're investing on behalf of that venture capitalist, or?
Well, there's definitely some private money. The SSBCI money is the public money that came from US Treasury.
Okay,
And the fund managers can use that money to make investments in a company for their fund. But there are obviously going to be some parameters around it. They've got to match it. They can't just use the public money. They've got to match it with some other money.
you're giving the money to Fresh Tracks
Right.
and they're investing it.
Yeah.
Oh, okay, I
Yeah.
get it. Okay,
Yeah,
I
we
wasn't
don't know
sure
how
which
to do that.
direction it was going. Okay,
Yeah, we're not venture capitalists. So,
Okay.
so we would like them to manage that money.
got it. Okay.
So. Thank you.
Can I ask another question? Since
Of course.
the clean energy loans
Mhm.
and that you have, 1,004 households, and then the 6,694 tons per year of greenhouse gas reductions. Is that through your regular,
Yes,
or do you have a specific fund that is
That's
tied toward greenhouse gas emissions?
we have a loan program. It's one of our subchapters. It was created in 2013 to support investments in renewable energy efficiency projects. It's within VITA and it's direct loans. So those stats that you just referenced are from loans that we've made through our normal lending activities.
And they're to businesses and,
So in that case, it could be to a solar developer who is putting
Okay.
up a solar array somewhere.
okay,
And that's the project, or it could be the panels on a farmer's roof.
is it all solar or is other things?
Most of it is solar, but we do have some digesters on farms. We've done a few energy efficiency, those are the harder ones, and we've done some hydro projects.
Like a few weatherization kind of energy efficiency
Mhm.
ones you need?
Yeah.
And what about geothermal? Have you done those?
Well, if it's part of a building, a new building, or a renovation of a building, yes.
Okay,
But that's usually part of a bigger project.
right. Okay. Thanks.
Okay, so if there are no more questions on VITA in general, we'll get to the page 398.
Yes.
All right. So it's great. You already had a walkthrough with Cameron. There's basically what I would describe as 3 things that this bill proposes to do. One is a lot of technical updates that have been long overdue. The VITA statute has been added to and kind of has become very difficult, let's say, to understand if you're somebody who's going to it for the first time. Language is out of date, that sort of thing. So there aren't there aren't many material changes. It's more reorganizing it and updating language. The second thing is it creates this disaster recovery loan fund within VITA. So this is a fund that's proposed to be perpetual at VITA to stand up the next time there's a disaster. It's small, it's $2 million that would be coming from some leftover VGAT money. And then the third thing that this round of changes does is it codifies the Vermont Sustainable Job Strategy. The Vermont. Are you laughing because you know about this?
Well, Cameron did go through it with us.
Okay.
It's an interesting history.
Yes, yes. It is very interesting. So let's see. I'll just start with the disaster recovery loan fund because I think that's really the substantial change here. Like I said, it would be a permanent fund. And the intent is to allow the language in the statute to be flexible enough that VITA, along with our partners at ACCD or the Agency of Agriculture, could create the correct structure for those funds at the time that they're needed. So, in other words, not put a lot of guardrails on right now to say the loans can't be any greater than X or smaller than Y or longer than A or shorter than B or to this entity or to that, because that will just create difficulties in implementing the program.
And the scale of things, $2 million is not a lot.
Yeah, it's not going to go far. And it will be one of those like after everything else is exhausted and is there any other money left? Oh yeah, we have $2 million at VITA. What can we do with that?
But that might make it work,
Right.
which is a lot of what you do is make it work. Right?
Yeah, thanks, Madam Chair. So on page 31 of the bill, in this section, which creates the disaster recovery loan fund, this came up when we were doing the walkthrough. It says provide loans and other forms of financial assistance. What does other forms of financial assistance mean?
I think that's just that flexibility factor. It could be like, I don't know, if somebody wanted to do a forgivable loan and then it doesn't become revolving, or I honestly can't think of anything other than a loan. Because it's not the intent that it would be a grant.
Yeah. Because it came up also because there's another bill that creates a grant program, a disaster for farmers or after disaster recovery grant fund, essentially. And so there was a question of how would this interact with that? And someone pointed out the other forms of financial assistance, but this is not intended to be a grant program.
No.
It's intended to, so maybe they would get a grant and a loan
Because it does
to
say
fully recover. but-
loan fund.
It does say loan fund, but so
Yeah.
that's why I wonder, I understand you're trying to provide, maintain flexibility, but that little phrase there, I think is a little confusing unless we can define it more.
Yeah.
Because it does leave open the possibility of grant.
Yeah. I don't disagree. Okay. You could strike it.
I mean, I think you said it's new, it's a small amount.
Yeah.
We don't know what the next disaster is gonna be, or if there'll be a FEMA, if the disaster's that big, it may be a small localized disaster.
Yeah.
We had a good part of, Randolph burn one year. Not FEMA big, but big for that town. So I think we'll probably get to refine this as time goes on. And we'll see where the holes are.
And you raise a good point in that, the language as it is written now doesn't require a full-out disaster to be declared by either the President of the United States or the governor. It could be an isolated geographic location or sectors of businesses that have something specific that's going on that could use some help.
Remember, there was a fear about army ants coming through and they could eat a cornfield overnight. There's all kinds of things out there that we just don't.
I heard that one.
Yeah.
Yeah, you know, we just don't know about.
Right.
And if, yeah, I mean, we just are.
Yeah, more and more. And so this money would sit at Vita, earn interest that goes into the fund. So there may be a little bit more than $2 million, but chances are the next disaster will happen sooner than later. But that's the concept of creating this.
And we can look at the words and make sure that they're loose enough to give you the ability to work and.
Yeah, thank you. Because that's the intent. You know, we've been doing this for a long time and having that flexibility to create a program as it structured to the need was very important.
I have another question. The, on line 10, it says policies and procedures. The authority shall establish policies and procedures for the fund that they determine if necessary. Because you're not an actual state department or whatever agency, do you have rulemaking authority or do you do everything by policy and procedure?
Policy and procedure.
Okay.
So we would develop policies and procedures at the time that we define, okay, here are the parameters that the eligible applicant would need.
Okay.
We do that for all our loan programs. All right, the technical updates. I'm happy to answer any questions that might have come up during the walkthrough. I don't have slides showing all of them, but I think a classic one is everything is referenced as a mortgage or mortgagor, but that doesn't fit the reality of what we do today. So that's being cleaned up, and we moved one section out of where it was to a different section for it to make sense. So if there's anything that you recall from the walkthrough that you want to ask.
Is that right? Well, I have been asking some of them that have come up, but the other one, and you have this maybe as another bullet point, I don't know, but for the Vermont Jobs Fund, there's also a Vermont Sustainable Jobs Fund. And so what is the difference? And
Yes,
can we make
great question. So the way our statute is written now in section 280A and 280B, it references something called the Vermont Sustainable Job Strategy, but nowhere in there is the actual Vermont Sustainable Job Strategy, right? So we have always used this piece of paper that we have with Howard Dean's signature on it from 1999. That is the Vermont Sustainable Job Strategy. It's a wonderful strategy. You know, you're giving me that look like, and I'll show you what it looks like. This is it.
There it is, Howard Dean.
This is a very broad framework that basically says, and Vita can do any project as long as it meets the criteria in this strategy. And the criteria are things that we do every day: job creation, quality jobs. There's 10 of them here. I won't read all of them, but the most common example of when we need to rely on this strategy because something, there's something that in our statute won't let us do the project, okay, is a downtown revitalization project. And that project might be done by a developer who is actually an investor. So it's investment real estate, which we can't do under our normal programs. But it's a project that the banks don't want to do because it's high risk, or the banks need to de-risk some of their risk, bring in Vita. Maybe there's housing related to it, so we can do a portion of it, but it's a downtown revitalization project. You can think of those like Putnam Block and Sloan and Bradboro, the Brooks House and St. Albans. We did a big project there. So these are high impact projects that are difficult to finance, and there are usually a lot of different sources of capital going in. That's kind of the most common example, and we can do that by using this strategy here. So when we were presenting this in the House Commerce Committee, the question came up of, well, should we just codify it, put it into statute right now? Because there's always this risk. I don't think it's a big risk, but that this could be changed without going through the legislative process, because this resides outside of statute. And any governor at the time has the authority to change this. So it could become a strategy that's not quite as good as it is today. It's a very good strategy.
So how does it relate to the Vermont Sustainable Jobs Fund? That's not actually part of your operation.
That's the problem. Everybody uses the same.
Yeah. I think it's really confusing.
Yeah.
And
And we have a jobs fund.
exactly, you have
Yeah.
a fund, but is
Right.
it sustainable jobs? Maybe
No.
not. They're
No.
not sustainable
No, it's just the
jobs.
jobs fund.
Sustainable jobs?
Where is
yeah.
the sustainable jobs?
That's, well, that's Ellen Kaler.
Yeah.
Okay,
Taylor
there's
job.
another whole.
Yeah.
Okay.
Yeah, it used to be within Vita, but now it's not.
So you just have a jobs fund, whether or not they're sustainable.
Yeah, and I think it's kind of confusing.
Well, I think at one point in-house commerce, they're like, well, she was needing something else. And
Yeah.
nobody came up with a better name. And
I-
so you
yeah.
said,
I can see us doing this. I'm sure, I know we do.
coming up with another name.
No, with the sustainable
Oh.
jobs, it sounds better than just jobs.
Yeah. So that's what that third sort of part of H398 does, is codify it. And I would strongly plead to not change it, although there was one wording change that Chair Marcotte added to item F there, and I think the wording is encourage economic development projects that reduce, mitigate, or eliminate impact of climate change. And then et cetera, et cetera. That was the only truth that was offered and that was mine.
That wasn't the big ticket item back when that
Right.
got written.
It's on page 27.
Thank you.
Yeah, it starts, it's section 280B. Is that where the whole thing is codified? Yeah. Starts on page 26. It's great. It was a good idea.
At first I was like, no, I'm so used to having this little piece of paper that.
Yeah. You kind of put on your bullet.
Yeah, now it's there. It's out there. If you didn't know about it, here it is. So that's what I have today. I'm happy to take more questions. There's lots of resources. We've got one that I will point you to that I would love for you to look at is our documentary video. It is on our website, right on the homepage. We made it in celebration of our 50-year anniversary, and several of you will recognize some people that are on the video, and so that was fun to make. And it gives you a good insight into the work of Vita.
Ah, sorry.
5 decades.
And if you click it, it starts
It
playing.
does start playing if you click it.
Yeah.
No little arrow to hook up. Well, when we're finished here, you can all sit and watch. Are there any questions at this point?
That's not a question, but just a comment. Congratulations to you.
Thank you.
You done a great job at Vita.
Oh,
And
thank you very much.
really,
I love it. It's the best job, really. I have very mixed feelings about leaving, but I know it's in good hands with great people. And Joan Goldstein, who you know very well, I'm sure has been in this committee quite a bit, is taking over. And so, and she knows that she's the designee for ACCD, so she sits on our board now. And so that's a great.
Thank you. Interesting. Because I think she's more of an insider, I think, than state government than,
An insider to Vita?
no, to the state government.
Oh,
So that will be interesting. Yeah.
Speaks the language.
she speaks the language. Yes, she does. Yeah.
Which can be a plus or a minus.
Well, she knows.
But she
She's got
does
the
know
money.
her stuff. Yeah, this will be, yeah, be missed.
It's,
Second director to turn over.
I
yeah.
have to say, it's still irking me that the fund name things, the jobs fund and the sustainable jobs fund. So if you have recommendations for how to deal with that,
Send them our way.
yeah,
Okay.
it's just confusing.
Yeah, it's amazing how big of a deal a name change can be.
Yeah, I'm
That's
sure,
true.
yeah, that is true.
That's true. And if you change it, it's gonna confuse some people.
Yeah.
It's probably
Yeah.
sitting in contracts.
It's not
Probably,
right
right.
now, it's
It's not about
gone.
that.
Yeah. Okay, if there's no questions, thank you.
Well, thank you.
Thank you.
Will you take the time?
Congratulations on retirement.
Yeah.
Rewirement.
Exactly.
I'm gonna let this percolate for a couple of days, to see if anything we haven't anticipated or something.
Yeah.
Shows up, but, we'll get this out of here, probably within the week.
I'm just up the hill or go call away. Happy to come back.
Probably my son's second grade class.
And
The bathroom next page.
You. I am missing the committee you're on this year. I was like, what?
We didn't. It was exciting and stimulating, that's why it's called such a place.
Okay,
Okay,
now I
we
get
are,
it. Now
I'm
it makes
sure.
sense.